All right, we are back again, and today we're going to talk about Symbiotec Pharmalab IPO, which is going public on the 28th of August 2026 this week. And what I would like to mention about this IPO right away is that it's a very heavy OFS, offer for sale heavy IPO, which I'd like to flag right away as a red flag personally for me whenever I'm looking and analyzing an IPO right away, because out of the 1700 odd crores that it is, 1700 crores uh, IPO that it's raising, the book building IPO that it's raising, 1600 about it, like about 1607 crores. So if you think of it, about 1760 crores out of the 1760 crores, about 1600 crores are entirely going into offer for sale. And the rest 150 crores over here, as you can see within this number, is towards raising fresh capital of the particular company. So, as I've mentioned before in a couple of videos already, one of the things that I'm very concerned about in a company that is trying to go public and is heavily skewed in the ratio between the fresh capital and the offer sale split, if it's heavily skewed, if it's offer for sale heavy or offer sale heavy, then I'd be a little concerned with the way the company is trying to go public in general, because I have to do a little bit more of an analysis to be able to understand why it's going off of a sale and why it's going public in the first place. A couple of good things to mention about the company. I did manage to read its RHP document, which is the red herring document, which is quite important for a company trying to go public, because it tries to take a lot of. You must understand, going public is not exactly a. It's not child's play. It does not happen within a couple of months, or it does not happen within like a quarter, like within 4 months. It actually takes over, it goes over a span of a year. And to be able to like really uh, come till the date of really going public, there's a lot of planning, there's a lot of consultation from anchor investors, investment bankers. Everything that goes inside an IPO is so, it's very it's sort of like underestimated for the public eye, whoever is investing in the company in general. So I think in general, like when I'm trying to analyze a company that's going public, I try to be as sympathetic as possible. But then at the end of the day, I must understand objectively that I'm a research analyst and I'm an investor primarily in the capital markets. And I need to be as objective as possible without being very emotional about why the company is going public. I need to be objective about whether the company is capable of making money for me or not. In this case, to answer the question right away, the price band is between 938 to 988 rupees. Forget about the 938 rupees altogether, because if you look at its anchor investors, the number of anchor investors that has attracted so far, which is about I don't know how many companies, about 34 companies, 34 different funds, and then a few more. One more second, yeah, a few more funds have in fact invested in the company completely. So you can see there's like it's quite heavy in terms of the number of people that are interested in the company from their anchors, investors perspective, and they have all priced it at 988 rupees. So even if you try purchasing, like usually as per my experience, even if I try bidding the company at 938 rupees, I would have not gotten the company at all for 15 shares, or how many ever shares it is, the lot size is, sort of like, prescribing to the public for the retail investor. And add all of this perspectives along with the fact that out of the 1700 crores, 1600 crores are going into the promoters' pockets. So I would already have some kind of concerns with the way this company is trying to go public, because I had to look at their risks, the number of risks that this company has actually stated within their red herring prospectus. It is that, just one second, I'll show you the exact words that they used. They mentioned something very interesting, which is a lot of their business is, in fact, already located across different countries. They've mentioned it even in their in it's already mentioned in the Chittorgarh website. A lot of their investments are already a lot of their business interests are already like located across the globe, and they've got a lot of like respect already garnered within the pharma industry already, because they operate within a niche field, and within that niche field they operate in a very sub niche field called APIs. APIs is basically, they've mentioned it somewhere over here, active pharmaceutical ingredients. So they deal with like very specific ingredients like testosterone and pharma ingredients that are not readily available within the geography that they're trying to work in. They sort of get it from different countries like China, USA. They've mentioned Korea as well over here. So they're working in a very niche field, and along with the niche field, they're sort of like even um, they're sort of like interacting with different business interests, different global interests. So whenever we're dealing with a company that's dealing with different global interests that are highly political in nature, they would be very concerned with the way these countries actually operate in general. So anywhere there's a difference in there's a political disturbance within these countries, their business interests start getting very disturbed in general. Like, so with that in perspective, you need to understand and judge a company's value based on all these risk factors, because as I mentioned before, this is primarily an investment that you're buying into. So if you're buying an investment, you would have to look into all the factors that they're really stating within their red herring prospectus, which is the RHP. And having said all of this, I think I am primarily concerned with their offer for sale, how heavy OFS this particular proposal is. It's, as I mentioned, about 1,600 crores are going into the promoter's pocket, and absolutely none of it is going into the operations, into the growth of the company in general. Another thing I want to mention is that they've mentioned somewhere in between within the RHP is that one second, I'll just show where they've mentioned it. Yeah, loans. They've mentioned loans somewhere. So, one second. Yeah, to give you some perspective over here, yeah. So, they've mentioned that a lot of loans have been given to their subsidiary companies. So, whenever we're dealing with, yeah, this is the point they've mentioned over here. We have extended certain loans to our subsidiaries and extended guarantees on their behalf. Any default by the subsidiaries in fulfilling their obligations will create a risk for them. Essentially, that's what they want to mean. What I'm trying to say essentially in this situation is that I think they would not mention it outright, but some bit of their like it's put in even the issues, objects for issue, IPO part of the particular uh, uh, within the Chittorgarh website, which is to say how much of the amount of money that they're raising is going into which part of what are they essentially doing with that money. They mentioned that about 112 crores are going into repayment of debts. So I think overall, I seem to be a little concerned. There are many red flags within the way this company is trying to go public. Number one, the number of risks that it's already attracting, because there's a lot of geographical risk that this company already has. It has dealings with China, it has dealings in USA, it has dealings in Korea, different countries where politically the nature of those countries depend on it depends on the nature of their political situation in those countries, and only then their businesses would be sustaining based on the political nature of these countries. Having said that, they also are OFS heavy. As I mentioned a lot, I think the risk of repetition, they're going very OFS heavy, and most of the money is not going into fruitful use for the operations of the company. It's all going into the promoters' hands into the prior investors' hands who want to liquidate their money and then get a good payday from them going public on the 28th of August. And then the third red flag for me is the fact that they are primarily using, at least some bit of their money is being used from going public to repayment of older debts. So I think a bit of a concern for me in the way their motivations are so far they're very concerning for me in the way they're trying to go public. Having said that, I think on a more technical perspective, I would not be surprised if their shareholding structure sort of drops down. Like once the 35% is sort of like the 34.47 percentage, about 35 percentage, they liquidate all their shares. The number of shareholders in the public sphere would sort of increase dramatically, and then all these promoters, they're liquidating their assets this time. Now that they're going OFS heavy. Uh, Rosewood Investments is interesting over here because they are based out of the US, so that's interesting. India Business Excellence Fund is, I think, related with the Motilal Oswal Fund. So I think even there they might be liquidating their investment over here. That's it for today. These are my thoughts about this company going public. Sorry about that. This company going public. I have certain good opinions about it, but then there's a lot of risk attached to the way their businesses are so far. So I would still insist that you do your due diligence, because only and only if you are aware of the way this company operates in the pharmaceutical space, only then you can uh, perhaps consider applying for this company. Otherwise, I would not suggest at all, because it's priced at a very high price at 988 rupees, and I think the retail investor might not be able to understand this company if they are not very well versed with the way pharma industry is and the risks attached to the way this company operates across different geographical entities. That's it for today. Until next time.